India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Wednesday morning, which means that, in 12, 14 hours time, we will have the Fed decision. And we will have that as a big story tomorrow morning. Yesterday was absolutely quiet in the markets. And today, will we be repeating the performance is the question. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Morning.
Hi, folks. Good morning. So it's D-Day, or should we say it's F-Day, right? I don't know what's the right alphabet to go with. But typically, at least what I remember, living memory, the Indian market usually does a bit of a pre-positioning in anticipation of a very expected favorable Fed outcome, right? So I don't know, the bulls have been so quiet now that Ganpati Visarjan is over. Maybe they decide to come back with a flourish and take positions ahead of the event.
They've been chanting Ganpati Bappa Moria yesterday all day, right? So, and I think you're right, because and not just here in India, global markets, it's a very well-priced kind of a rate cut, right? It's a well-expected rate cut, let me put it that way. So quickly, right? The cues as they stand this morning, global markets are in a wait-and-watch mode. The big decision is the Fed decision later today. Fed Chair Powell and his remarks also will be important. Is it 25? Is it 50? I mean, that essentially is the question. If it is 25, will it be followed by enough dovish commentary which kind of projects, faster pace of rate cuts after the first 25 basis point cut? If it's a 50, what is the projection after that? Is it going to be a little slower, wait and watch? I mean, I think, if irrespective of what you get, 25 and 50, both can be, both can stump you depending on what the commentary really is. So I don't think just a 25 or a 50 will... one can decide what the market will do based on that. And I think, irrespective of whether it is 25 or 50, Fed Chair Powell and his remarks should be dovish, should be generally quite dovish. Even if it is 25, they'll make it up for the other 25 in the commentary. So I don't think it's it's kind of hard to see how this can be negative in that sense. Maybe a little bit of profit taking at the very margin, at the very near term, possible. But even that, I mean, we'll see. I think a lot will depend on how he sort of plays it. Now, we were talking about retail sales data, and that came in sort of modestly stronger than expectations. Fed pricing did not move. I mean, one thought that perhaps will pull back a little bit, but that held at about 40 basis points or so. That is today's cut. So market pricing is indicating a 40, 50 basis point cut. Although, I mean, many economists are saying, well, perhaps they will just start with a 25 with a very dovish sounding commentary saying, well, this is just the start and more is coming. Best of both worlds, right? I mean, a strong retail sales number and a 50 basis point cut to kick it off. We'll see. Overnight equities, absolutely flat. S&P actually made a intraday high, all-time high, by the way, but just very briefly, and then it pulled back. So the change, nothing really, flattish close. The 10-year was up 2 basis points. The dollar index is now creeping back to about 101 kind of levels, but it's come off so sharply, so fast, and that's the reason why we're seeing these intraday sort of recoveries. Oil prices, something similar, right? Sharp sell-off, and we're back at near $74 per barrel mark. Just to kind of circle back levels here, they don't change. The target stays the resistance zone, which is the 25,475 to 25,530 levels. We're not very far away. We're very close by, even at yesterday's close. So that's, I think, the broad zone. And we'll see if we get one bout of some pullback profit booking from those levels. We're about 500 points, a little over 100 points away from yesterday's close to the upper end of that resistance zone. Support stands at 25,035. Now, Nifty Bank is sustaining above the 66% retracement of the fall. That also had a very, very flat session. Target here is 52,550, which is the 78.6% retracement. And supports are the 40 hourly, 51,789. And then the 20-day moving average, which comes in at 51,335 kind of level. So, I mean, I said this yesterday morning as well. Maybe, at least on the indices, a bit of wait and watch perhaps is what we are in for. And I think something similar today as well. So 20 points higher on the GIFT Nifty, the indication from the GIFT Nifty. Surabhi.
Okay, so let's see if we can keep building on that and keep drifting higher, which was the case yesterday as well. Just a couple of cues in terms of, we're talking about this probability of 50 basis points or 25 basis points. So here's how the numbers stack up as of now. If you go by the CME Fed Watch tool, then the probability of 50 basis points is a lot higher, and the swing has happened in the last 4 to 5 trading sessions itself. Earlier, it was all about 25 basis points, but now 65% probability of a larger rate cut, 50 bips, and 35% probability of a smaller one, which is 25 bips. Let's, also look at some of the other data points. By the way, the Fed has been on hold since July of 23, and the rate has been the highest in the last 23 years. I mean, just some more stats in terms of where we are and how the cuts will start now coming in from today in all expectation. Moving to some more numbers and data that we're getting out of Asia this morning. We've got the export-import data out of Japan, and it's all below expectations. So the numbers, optically don't look bad. The import number is up 2.3%, but it's a far cry from the estimate, which was in double digits. So weak imports in Japan. Exports are up 5.6%, but again, far lower. The Reuters poll was expecting a 10% growth of Japanese exports. That's not what's happened. So August has been a subdued month. By the way, some of the regional markets are still closed, so just putting that on your radar as well. South Korea and Hong Kong is closed today. Mainland China is coming back to trade. Speaking of export-import data, let's look at the picture back here at home, because we had some big headlines come through. The trade deficit has rushed to a 10-month high. Why has that happened? Because exports have not really moved that much, 34.7 billion versus 34.5 billion, more or less, if you're comparing it year on year. Whereas imports have surged. Imports have moved to above 64 billion now, thanks to all the gold that we Indians are importing. Because of that, the trade deficit number is not looking too great. 10-month high of just under 30 billion now. We'll have, of course, Lata talk more about this data and what the implications could be, but keep that on the radar. In terms of fund flows, we had sort of muted action yesterday, but both institutional investors on the buy side, FIIs and DIIs. FIIs bought just under 500 crores of equity in the cash markets, and DIIs were buyers to the extent of about 870 crores. We'll keep waiting for the big headline, which is the Federal Reserve. In terms of individual stock action, plenty to track. Thanks to the cooling off in oil prices, for instance, windfall tax has been cut. So watch out for some of the upstream oil players. It could be beneficial for them. And very interestingly, by the way, watch out for VST Industries today as well, because Mr. Radhakrishnan Damani, he's been consistently cutting his stake in the company. He sold a little more, and we'll see how that plays out. And whether that weighs on the stock. So enough to perhaps keep us occupied in terms of the individual stock action and the fact that today is F day. I won't say D day, but it's Fed day today.
Well, that's right. And ahead of that big event, to go light into the event may not be such a bad thing. And in fact, we made this point yesterday as well, that we started gap up, but you could take some money off the table because, there's going to be a big decision coming in from the Fed leader tonight. 25 basis point, well, that could be the preferred outcome. We have seen in the past when 50 basis points comes about, it sets the cat among the pigeons, whether or not the economy is weaker than expected. So 25 basis points is something that I think would be preferable from a bullish standpoint. Today as well, in terms of a domestic cue, you have the Nifty Bank that plays out the weekly expiry, so we'll keep an eye out on that index. How are the FIs positioned? 68% of their positions are on the long side, and 32% on the short side. And in the last 1 week or so, you'll take a look at it. The FIs were net long. Will they build on to their net long positions? So the long positioning has gone up by close to around 70,000 contracts, 1.5 lakh contracts to around 2.2 lakh contracts. What about clients? They were net short. Those short positions have gone up by close to around 1 lakh contracts odd. Normally, when we see this sort of a positioning from the client as well as the FIs, it calls for some bit of a maybe near-term pullback, maybe a 200 point, maybe a 1.5% or thereabouts. So let's see how that goes. What are the levels we're looking at? Well, I was looking at the options data. I was looking at the recent reference points as well. And you'll have to say the uptrend is intact till the 20 DMA is held out. However, resistance comes in at around 25,500, 25,550 odd. The Nifty Bank, that plays out the weekly expiry, so we'll keep an eye out on that index. And that's the broad range, where you have the 20 as well as the 50 DMA out there. So that's about the broad indices. And as I said earlier, even yesterday I made this point, this market is not for the faint-hearted in the near term. Taking some money off the table, going light into this big event may not be such a bad idea. I'm looking at two clutch of stocks. One is the stocks that have come out of the F&O ban. So we'll keep an eye out on both these two names. And the other one is Nuvoco, one of those cement players that listed and has been a big underperformer. Valuation-wise, it's not cheap, but the market has not been very, very excited about that. Yesterday, we had a large trade. You had a Kotak special fund in there that sold stake, in the company. And before that, we'll just look at it. The stock now is trading above the 340 level, which is a 20, 50, 100, as well as 200 DMA. So technically, as well as trading above those levels. And it appears yesterday, the Kotak special fund, there was a bit of a clean-out trade that took place out there because they had close to around 4.5% stake in the company, and gradually they have been selling stake in the company as well. It was picked up by SBI Mutual Fund, whose consolidated holding now goes up to around 10% or thereabouts. So clean-out trade, cross some technical barriers, and trades at around $85 per ton. We'll keep an eye out on Nuvoco.
Okay, all right, Nigel, got it. So plenty to track today. Thanks for all of those cues. Let's move on then to the equity call of the morning. Neelkant Mishra of Axis Capital says while India's GDP growth forecasts have been upgraded meaningfully over the past few quarters, he does not think trend growth may rise beyond 7 to 7.5%. However, he adds that should be strong enough to push the investment ratio to 34%, 3.6 percentage points above FY24, driven by 1.8 percentage point improvement each for households and corporates. He says the near-term slowdown is driven by unintended fiscal and monetary tightening and thus temporary. He says they're overweight on industrials, where EPS upgrades can continue to justify elevated price-to-earnings multiples. He says EPS upgrades likely in utilities and cement, but metals face some global headwinds.
All right, well, those are some views. Let's